Hello everybody, welcome to our panel discussion after the budget. We wanted to give you some expert tips on what you might see in the week or two ahead. So let me introduce a few people. You can see Kevin Taylor from our tax planning department. Kevin, do you want to give us a wave?
Hi all.
You can see Kirsty Haydock, who's looking after our financial services. I think you might be on mute, Kirsty. And Sharon, who's looking after all our mortgage advice for our clients too. Morning, Sharon.
Morning, everyone.
Okay, so after a year of the pandemic, the budget came and went, and key highlights to come from it. Let's maybe start off on the housing side with you, Sharon. And the headline announcement was 95% government-backed mortgages. Now, is that for every man, or is that only for first-time buyers? Who should be maybe thinking, is this the time to move?
Okay, so this relates to first-time buyers, but also next-time buyers. As long as the buyer is purchasing a property for themselves to live in, it's not a second home or a buy-to-let property, then it's as open to next-time buyers as it would be first-time buyers.
So how does that work then? What's changed as of the announcement on Wednesday? And is it likely to see the house prices push up because more people are trying to jump into the market?
Yeah, so since the pandemic hit last year, the mortgage market has become much more cautious. And up until March last year, lenders quite often lending in the 95% arena. That changed after March last year, and lenders were demanding much higher deposits. And at the start of the pandemic, that could have been as much as 20 to 25% with some lenders. So that's put off a large sector of the economy looking to buy because those deposits simply weren't there. This encourages lenders to offer those higher level mortgages and will attract the buyers that have only got savings of 5% or equity of 5% in the property. And it gives lenders more confidence backed by a guarantee from the government so that they feel more comfortable and confident in lending at those levels to buyers. So what that will allow clients to go and do is have a much smaller stake in their properties, which will allow for more buyers, stimulate the property market, and we'll find that the property buying house process will become more buoyant as a result.
Okay.
Have you found the property market become more buoyant, Sharon, following the SDLT exemption? Has that helped with property prices?
It has. I think there's been a pent-up desire during lockdowns last year for clients to want to buy that couldn't move and were being guided to stay at home and not look at properties and make that jump. So that there has been a pent-up desire already. That's been ever fueled by the reduction in the stamp duty threshold over the last 6 to 8 months, and combined now with the ability of buyers to find those mortgages where their deposit isn't as great, that will again stimulate the market and we'll see more purchases and sales to market in the next 6 months.
Yeah, it was good news yesterday. The SDLT exemption got extended for another 3 months and then reduced down to September. So at least there's no cliff edge that we're talking about.
Absolutely. And so I think it's very important that clients think about jumping sooner rather than later when it comes to buying a property, as that all this positivity is likely to push prices up again as it did last year. And so clients might find that if they delay and wait 6 to 8 months to start looking to put the house on the market and move, they may be spending more money than they would have done now on those same types of properties, and hence need an even greater level of deposit. And of course, to avoid that stamp duty payment, which will start to diminish at the end of June and go back to the original plan at the end of September, that saving could of course go towards that deposit as well. So it's really vital that they, if they're going to make that transition to buying again, perhaps do so sooner rather than later.
Yeah, and just to explain to anybody who that maybe has raised an eyebrow and you want to take that a little bit further, if you go to the mortgages page on the website, down at the bottom of there, there's a form, and you can just ask Sharon to come back to you to have a one-to-one chat about your own circumstances on that. Same thing applies, of course, in terms of financial services and tax planning with the Kirsty and Dave and Kevin on our tax planning team. Just jumping over to more company orientated tax and what changed in taxation, Kevin, can you give us a quick 30-second summary on the main highlights?
Yeah, of course. There was a lot of talk before and a lot of fear that corporation tax rates might increase from this April coming. In the end, we did announce an increase from 19% to 25%, but it's delayed by 2 years till April 2023. So that's good news in the short term for companies not having to worry about a sudden increase in the corporation tax rates. Moving forward to 2023, there's a new small profits rate for companies that earn or making profits less than £50,000, then they're still stuck at the 19% tax rate. So that's good news for smaller companies. And for companies making profits between £50,000 and £250,000, then there's a marginal tax rate between the two. So it's quite good news from companies. It didn't suddenly hit them with an increase of tax on that basis. And also he announced a new loss relief where companies can now carry back losses for 3 years rather than one, or to a maximum, I think it was £2 million of losses. So that could be useful to raise tax repayment revenue in the light of the pandemic. And the final thing that for corporation tax that was particularly pertinent is the announcement of a new super deduction, whereby if you're making qualifying payments, or companies been qualifying payments into plant and machinery with effect from 1st of April coming for the following 2 years, they now get 130% increase in that expenditure. Now that can be worth a 25% corporation tax deduction on expenditure undertaken in that period. So all things combined, although the base rate of corporation tax is going up 25% in the longer term, in the shorter term, there's still things we can do to look at saving tax.
And in terms of the here and the now and the end of the tax year coming up, is there anything people can do in the next month that is going to make a tangible difference?
For personal tax, well, there was a big fear in the budget. It previously sort of said that income tax national insurance rates weren't going to increase in the Conservative government period, and he stuck by that in the budget. He did, however, sort of keep the personal tax allowance and the basic rate band as they were, following small increases coming up in April. So that means that over the next sort of 5 or 6 years, more and more people are going to potentially find themselves into the higher rate of tax due to inflationary or performance pay increases. So we can obviously look at sort of pension planning in that respect that Kirsty will probably be able to touch on, where people at risk of going to higher rate can save money or save income tax by investing in personal pensions.
So, well, take that invite up there, Kirsty, from Kevin. You know, over the next month or so, what should people do if they're trying to make sure they're in a better financial position a month from now than they would otherwise have been, particularly on the pension side of things? And how does that relate to every man, not just the super rich?
Yeah, definitely. I mean, if I just go back to the point that Kevin made about corporation tax, if there are anybody now that are looking at their profits towards the end of the company year end, if they've got if they're a company director, they're classed as an employee and got an employment contract there, they can set a pension up and put money into a pension traditionally as an employee contribution going in, and that can be deducted as an expense against the profits. And therefore, you know, they're making that saving on corporation tax. In the here and now, I probably wouldn't say that you would have time to do that before the end of the tax year, because you know, all the time involved in getting a pension set up. So if you've got an existing pension, you know, that's great, because it's quite easy to get a single contribution paid into an existing pension to mitigate paying that corporation tax on the profits. And importantly, you know, it's a case of making sure that that's wholly and exclusive, because there is that rule there. But commonly, you know, if you have made those profits, you can put it into a pension to save the tax. On that, if you have got a large amount of profit that you don't want to pay corporation tax on, you can use the carry forward allowances as well. So if you have an existing registered pension, providing that pension is 2, 3 or even 4 years old, you can use previous annual allowance of 40,000, and you can carry that forward if you wanted to make a big lump pension contribution into a registered pension as an employer contribution.
Okay, one more thing that we should maybe mention: on the 23rd of March, the government's going to unveil a 10-year tax strategy, so that, you know, longer term changes are coming. Obviously, there's billions to be found to pay the COVID bill. So if you were to give maybe one tip each, just to close off to people, I'll come to you, Sharon, first. Quick one on that. Steps to take for the month, 2-3 months ahead. What would your one tip be in light of what was announced yesterday?
I think it would be to seek advice as soon as possible to make sure that you are putting yourself in the best place possible to qualify for a mortgage ready for the next 12 months. There's bound to be a lot of competitiveness with products and rates as the market shifts into 95% lending, but that doesn't take away the criteria and the policy that lenders have that clients have to fit within. So it's to make sure that you are mortgage ready by speaking to a professional about your background, your income, your circumstances, so that when you are ready to make that application to a lender, you're confident that you will be eligible for a mortgage. Okay,
Kevin, can jump to you, your view?
Yeah, I mean, I think that when this consultation gets announced, there's no doubt that tax is going to go up in the longer term. There was no mention of increase to capital gains tax and inheritance tax in the budget, but I think both will potentially rise and release be cut in the coming years. So always come to us for a look at your initial position and things that we can do to mitigate that moving forward as things currently stand. And obviously we can keep you fully informed of changes as they arise.
And I think you've got something planned we're going to put out for year-end tips maybe next week, Kevin.
Yeah, there's often tax planning that we can do at the end of the tax year, which finishes 5th of April each year, and we'll be releasing an email next year with a few of the sort of standard and a few additional tips to consider as we approach this year end. And
Kirsty, do you want to close us off for now with your top tip?
My top tip really is just to just sort of be aware what the thresholds are, and don't be afraid to ask what things you can do to mitigate paying additional tax. You're not sort of breaking the law by asking us. It's perfectly you're entitled to mitigate against paying tax, and it's just good financial planning really, and that's what we're here to help with.
That's a very valid point for Kirsty. Don't be put off by minimising your tax legitimately. So come to us for an overhaul and a check.
Yeah, and I just as you're talking, guys, just so everybody knows where they can find you all and how they can go about this. If you jump to the services page here on our website, if you want to talk to Sharon, then you can go down to our mortgage page and just drop her a message here, hit the check it now button, and that'll take you through. Equally, if you want to talk to Dave on financial services or to Kirsty, then same thing, don't miss out on their advice on the financial services page. Just drop it in there what you want to talk about. And Kevin, same thing applies obviously on tax planning too. Now, generally, of course, we're always here for any free advice. Just give us a call. We're here to help you. That's the end of the budget roundup for 2021. We'll be in touch with you very soon. And thanks everybody for taking part.
Thank you.